Hi, Dave Johnston here with Day Trade the Markets. We're looking at a 2-minute chart of the Feb 2017 crude contract. Today is Wednesday, December the 21st, 2016. So we've had a good down move. Today we had, this was the news reaction right here, came down immediately, went all the way back up towards its high, and then we got aggressive selling coming in, tried to be bought up here, and really stayed contained within that area. As you can see, our software created in real time this trade location zone. It broke through there. We did have a short trade, and we had a nice profit on it, but not a huge one. And then the market has come up here and decelerated. And after this deceleration, I've decided to get short once again, because when it did rally up here, it came up into an area of likely resistance. Didn't quite get all that way up there. 92 was the barrier, and you can see that our software actually created this in real time. So I was trying to wait until it got up into this area to get short again, but decided to get in here anyway. So we don't have the best trade location, but if the market truly is as weak as it looks, then we're going to break through and make new lows for the day here. So that's why I've gone ahead and gotten short. And I'm also going to place another order up in here at 90, just below that resistance, to get short another 4 contracts. So that's where it's at right now. So and as far as our stop is concerned, I will go ahead and place a protective buy stop up here for the time being, and I'll have to increase the number of contracts on that depending on what happens. It may be 4, maybe 8. I'll leave it at 8 for the time being. And I will also go ahead and put another buy limit down, or another order in here, this time a buy limit. You can see that we're short here from 76, and we knew that the 66 was a potential target. So I'm going to go ahead and I'm going to put it right at 66 to try and buy 2 back, and we'll see if it does in fact hit that next area of support. Because when we take a look at it here, going back a couple of days, we can see that we've got support in the 66 area, and then the next one below that would be about 60. So I'll just leave it at 66. That'll give us 10 ticks on the first half of the position, and we'll just leave it at that. As a matter of fact, now that we've come down here, I'm going to go ahead and place a buy stop here just above where the market peaked out. So that's at 85. So put it at 86 for the buy stop. And I think I'm going to leave that 92 in there. And at this, I will have to make an adjustment on that down to 4 contracts there. So, okay, so we're all set up. We've got all of our orders in place. I'm going to pause the recording here and pick it up as the market dictates. Okay, just restarted the recording. The market did have a bit of a bounce here, formed our deceleration bar, which is this triangle on top of this buying bar. So I'm going to lower the stop to just above that. There we go right there. So risking 4 ticks on this trade. So just wanted to bring you up to date on that. And once again, I'll go ahead and pause the recording. Okay, just restarted the recording. We just got filled at 66 here for half of the position. So I'm going to reduce the number of contracts on our protective buy stop down to 2 as a result. And the other thing I'm going to do is move that stop. Now, okay, we just had a red bar form right here. And let me close that. And as a result, I really don't want to see the market move much above the high of that red bar. So the high of that red bar is at 73. Okay, and our break-even stop would be at 76. So I'll lower that stop to break-even right there at 76. So risking 3 ticks on the second half of this 4 contract trade we made short in the crude. And of course, this is for Wednesday, December the 21st, 2016. So I can move this out of the way because our stop is at break even. So just bringing you up to date on that, and I will go ahead and pause the recording. Okay, we're getting some good follow through here. I'd mentioned earlier that the next objective down was roughly in the 60 area. So we've actually moved below that. So I'm going to lower the stop here to where we were filled on the first objective at 66, because that was the next barrier. So as long as it can stay below 60 at this point in time, I think we're looking good. Yeah, if it can hold below 60, 58, 60 area, we could have a really nice leg down, and then the next leg after that would take it down to about 28. So we're still short too, and we've hit into this 60 area, so I'm going to go ahead and buy another one back here, buy limit at 56. See what we can get out of that. I know it's already hit there. Should have actually had that order in ahead of time, but that's how it goes sometimes. At any rate, so there we are. We could have a bounce off of this 60 area, and I just want to take another look here. Our order right now is at 56. I think I'm going to bring that up just a couple ticks here. Okay, we just got a magenta bar right in here. So I've brought it up to, I'm bringing it up to 60, 59, right at the current price. Okay, there we just got filled at 59. So I need to adjust this stop here down to just one contract, because we've only got one left. So we were filled on that one here. I'll just use an arrow on that. So that was filled at 60 right here at that next objective. So okay, we've got a magenta bar here now. We really don't want to see the market move much above the high of that magenta. It might get up to the 66, hopefully not. And then we can get another leg down here. So still got good seller control. The thing that's a bit worrisome from the short side is that we have hit a fairly important support area, which is in this 60 area. So we could have a bit of a bounce here, but we've got our stop in place, and we'll just let the market unfold. So I'll pause the recording now. Okay, just restarted the recording. You can see the market had another leg down here. I had to just step away for a minute, and we've got a bit of a bounce here. It has moved above the this lowest of the aggressive selling right in here. The high of that bar is at 45, and it did reach 48. I'm going to put a buy stop in right here at 50 on that. We'll see how we do there. It has moved down nicely. Where to get to 32. I think that next level we were looking at was around the 28. Yeah, so it almost reached there. So just bringing you up to date on that. So we've lowered, let's see, we're just, I don't need that buy stop there anymore. This was our first exit here, and this was the second exit, and we have a stop right here right now. So just bringing those up to date, and I can get rid of that arrow. So we're still short. I'm going to cancel this now. It's a long ways away. So this was the short from 76. We got out 2 contracts at 66, got out 1 contract at 60, and our stop here is at 50 for the final. So we'll see how we do this. Maybe we can come down one more time and actually make it to 28, and then I can tighten up the stop a little bit more. But in the meantime, I'll go ahead and pause the recording. Okay, just resume the recording. We just got nicked here at 50 on the final. So we were short from up here at, what was it, 76, and we were out 2 at 66, we were out 1 at 60, and the other one here at 50. So worked out to be a pretty good trade. I think the thing that was important in this particular trade was the fact that we knew that there was a good support at 92, 52.92, and when the news was released, it came down very, very close to it. And I'll just go here, just get the broader view. And then the market here really was contained within that vertical. And as you can see, we had trade locations in here. When it did start to break down, it broke down with good confidence here. And when it came back up, if you recall, I had an order in here to get short just below the resistance. But when this decel bar came in here on the heels of this buying, went ahead and got short once its low was taken out. So that was the reason for the trade and the entry technique. And then, of course, as far as the management was concerned, it was just I was going for areas, first couple of objectives as to where potential support lay. And the first one was around 66, the next one was around 60. So got out at those two locations for half the position on the first and 1/4 of the position on the second, and then we just use a trailing stop. We did have the next objective down at 28, didn't quite hit that, and then we got stopped here. Stopped out at 50 off of the 76 short. So it turned out to be a pretty good trade, and this was not just a lesson, I think, for us in the fact that to kind of be a bit patient once the news is released, and then get a better handle on what the market really does after that volatility comes in, and does it break from an area where the market has contained itself, if in fact it has created a vertical move in the post-news environment, which is what happened right here. News, post-news environment, consolidation, and then the break, and then using our software as far as aggression, deceleration, etc., to actually enter the trade specifically, and then, of course, to manage it. So any questions or comments, feel free to contact us at info@daytradethemarkets.com. Thanks for watching, and we'll see you next time.